Right, welcome back, guys. Let's continue from this number 4. It says scalping, also known as scalp. Scalping is the type of trading that you trade like you are looking for the smaller moves. You can just pause this video and watch or read everything else here, but let me just explain it to you in a easier way, in a shorter way. Scalping is when you go over to the little time frames and look for those opportunity trades that moves faster. In the scalp, you want to be going to the 5 minutes, to 10 minutes, 15 minutes. You are looking for those quick moves. You want to benefit from them and use them to take some few trades. They have different types of trading. We have scalpers, we have day traders, we have swing trading. We also have position trading. Don't worry, I will also make a video about all these things, which type of trader you are, and how to know the type of trader that you are. All right, so the next one I share is the equity. Equity represents the amount of money you have at your account, the amount of money you deposit to trade with, or the present balance you have. That is your equity. Once you deposit your money, you will see it at the left hand side. It says equity. You will now see how much you have. Then risk management. Over here you can see this place have a short definition of risk management, but I will explain it to you. Risk management is just the amount of money you use to take a trade. Like, how much are you willing to risk? If, for example, you have $1,000, okay, I can say in a particular trade I can risk $100 to take a trade, and I will be targeting $200. That is a risk of reward to 1:2. In the risk of reward to 1:3, meaning you are willing to risk $100 and you are willing to target about 300, 1:3. So risk management is how much you are using to take, how much risk you are putting per trade, how much lot size you use. You just know that the lot size you use also determines the risk. If your lot size is very big, meaning your risk is very big. You know what they say: big risks, big reward; smaller risks, smaller reward. So the bigger your lot size, the bigger the profit you make, but also the bigger the risks you put on that trade. If that trade goes against you, you have a very big risk, but if it goes in your direction, you are going to earn very big. But with the strategies that I share on this channel, you will hardly take a loss, except you are not yet, I don't know, you are not yet committed. So but by the time you are committed to this channel and you are committed to forex trading as a whole, trust me, you will understand the market. Just learn to have that patience and run with this business. This business can really change your life for good. Trust me. The number 7, we have leverage. Is the use of borrowed funds to increase one's trading position beyond that. So leverage is not the amount of money the broker allows you to trade with. If, for example, they give you a leverage of 1:50, they say type of leverage 1:50, 1:500, 1:2000, 1 unlimited. Meaning, the bigger the leverage you have, the more positions you'll be able to add. But it can be a bad thing. Maybe you have too many positions and you are in loss. All the positions you have, like 50 positions, 10, 25, they are all in loss. They are losing trade. That way, your money will be easily be lost. That's why leverage can be a bad thing, but it can also be a good thing for you if you know how to trade. Leverage will really help you. So learn from me, learn from other people, learn from, there are so many teachers in the YouTube space. They will teach you how to trade, and I also teach you. Please do well to like this video and subscribe to the channel. Let's grow together. Number 8, a broker. A broker is a person that facilitates transaction between blah blah blah. You see everything here, but a forex broker is now what gives you all this access to trade. You guys, you are hearing me talking about trading all this currency paper, but you might not know, okay, how do I have access to them? That is when a broker comes into place. Broker will now give you website to create an account in, to deposit your money to start trading from. You can trade this foreign exchange market through transactions you make there, and you get these things through a broker. Transactions in the forex market are always between a pair of two different countries. That's why I said in the beginning of our last video, I said this currency pair, we trade them, this forex trading, we trade them in pair. There are different types of broker. You have the ENC, electronic communication network, the STP, the straight through processing, the market makers. The electronic communication network, these are the ones that are connected to the banks. These brokers, if you make $10 million, $1 million from them today, they will pay you the money. Straight STP, the second one, straight to processing, also the same thing. But the last one, market makers. Bro, you do not want to trade with a market maker broker. You should jump a broker that are called market makers. Like you go and research about them. You find out that they are market makers. Run away from that broker. That broker, if you make $100, $200, they might not pay you. Like $200,000, they will not pay you. Not they will not pay you that money, because that money, they are not connected to the banks. They are not connected to the big guys in the game. They make the money from their own pockets. That's why when you make that money from them, they will refuse to give it to you, because they will say, you want to steal, you want to, you are profiting from their money, so they will not release it to you. So learn to trade with a good broker. If you want to know the broker I use, I trade with the broker that Bybit Exchange are offering. Those brokers are really, really nice. They have paid me so much over the years, and yeah, withdrawals are very fast, deposits are very, very fast. You want to know how I trade or the brokers I use, you can get the link below, or you just go over to Bybit Exchange if you already have an account with them. Obviously, most of you will have an account with Bybit. If you don't, comment. I will also put you through on how to do that. Then break even now, the point where you are in profit, where you can no longer in loss, you can no longer be in loss. The level at which the risk is recovered. So break even is where you enter a trade from, where you can say, okay, this is where I enter this trade from. Here I'm now in profit. You can now secure the profit that you have. The margin is just like seeing your is similar to equity, knowing how much percentage you have to take a trade. If you're in profit, your margin will be increasing. If you are in loss, your margin will be reducing. Thereby your trades will be closing. They will be closing your trade one after the other, because you are not in loss. So the bigger account balance, the bigger margin you have. Spread is just the distance between the number 11 spread, the distance between the bid and the ask price. Don't worry, in the next video I'll be showing you guys where spread is, so you can see it's just a little distance. It's not hard. It's the price where you can buy the base currency. So spread is how the brokers make their money, from spread, from commissions, from things that people, as they take a trade, the commissions that earn from those trades. That's how brokers make their money, and also make their money from spread, right? So this is why the term transaction cost and bid price are used interchangeably. How much each trade you take, the brokers are having their own percentage being sent to them. So that is it. So that is it for it. They make money by selling the currency to you for than you pay them to buy it. Said they make money by selling the currency to you for more than you pay them to buy it. Meaning they might sell it to you $50, and you will be buying it from them $100. So that is how it works. That is how they are so rich. So like I said, forex trading can change your life. Tools for trading: you need the MT5, a good prop firm, a good broker. There are other tools like Trading View, forex calendars, many other things that you need. In the next video, I will be talking about them. So, but for the now, this is the basic thing. You can watch this video again. I said about the two types of trade, the two parts of forex trading: how to trade currency, what are traded, what you need to know, how to take a trade or take profit, stop loss. Those basic things, they are all in this video. Watch it again so you can understand it. In the next video, we'll be talking about how you see all these things in the MT5 in practical. So please do well to like this video, also subscribe to the channel, so we can grow this channel together, right? So I'm going to see you guys on the next video. We'll talk about MT5 and other tools you need as a trader, right? So please, thank you for watching to the very end. Those of you that watch to the end, thank you. On the next video, I'll be making some Google tips on how to trade forex and how to make money from forex. After you have known this knowledge, we're not talking about the advanced parts, right? So please do it to like this video. As I said, subscribe and share. Leave a nice comment. If you have any question, let me know in the comment section. I will do my best to answer you. All right, that's it for the video. Take it easy, guys, and peace out.